Hey guys, this is Just Whatever, and today we're doing stocks. We're going to talk about ways to make money in a down market when all your portfolio is red, red, red. It won't recover your portfolio completely, but it'll get you some income in the meantime. What I've been doing for the past couple months, I just learned about this, I guess, beginning of the year, maybe in February, is covered calls. What a covered call is essentially you're selling the obligation to sell one of your stocks that you have 100 of at a certain price. For example, if I, say I have 500 shares of Palantir, which I do, and it is down. You don't have to tell me, you don't have to remind me, but say you have those 500 shares and you want to make some extra money. So say the stock is at $7, which right now it is. And you wanted to say, oh, at $9 or $10, I would be comfortable selling this call, or selling these shares, or however many shares you wanted to sell in 100 share increments. You say, okay, I want to sell at that, but I'll collect a premium. So basically, you make that call, you sell it, and then the broker or the options, I don't know who gives you money, but you get money from that. And usually you gain about 1 to 3% of the contract value. So it's not exponential, it's not huge. But if you have thousands of shares of something, I think it is something that you should do. And even if you have 100 shares of something, I think everyone should employ this. It is a way to gain money when things are dry. And as the price, if the price goes down, you can cash out of those covered calls and be able to write more. So I'm going to go into Fidelity and show you guys what I do. I'm not going to write one because I've already wrote all the ones I can, but I'm going to open up the app and show you how to do it. All right, so opening up the account here. If you've been following my other videos, things are not looking great. The year we're down a lot, but that's neither here nor there. We're talking about calls. That $100 that I have right there, 119, I gained that from just selling covered calls in Palantir. So right now I have 5 contracts that I sold. I gained $21 per share of that, and let me go into each share. So opening up Palantir, this is how it looks in Fidelity. It also looks different in Robinhood or any of the other brokers that you use. Right now we're down a lot, but it's neither here nor there. Keep saying that. But let's look at an options chain. So if you've never seen an options chain, this is what it's going to look like. So it's going to open up. So you have different days. So it's the May 13th date, which is this Friday. We have the May 20th, which is 9 days from now, and so on and so forth. We can keep going on and on. I'm not sure, in this, it only gives me 65 days out. If you're buying leaps, different story. However, the optimal way to do it, as I've learned, other people have different things. Some people do weeklies. Some people do 0 days till expiration just to gain some extra premium at the end. So let's go to the 37th day, the June 17th. So we'll go into the calls and we'll look at these. So $8, there's possibility this thing might hit $8. There's possibility it might hit 9 and 10. So a way to kind of figure this out is, one, you might want to do some technical analysis to see where you think this stock can go. It can be flat. Technical analysis isn't the end all be all. There's macro environments going on all the time. But let's open up the number 9. So here, the delta is what you're looking for. So you're looking to go anywhere from 15 to 30. So 0.18 or 0.21877. That is what's called the delta, but it's also probability. So that's something I look at to say, where do I want to sell these calls? Sometimes I'll sell 30, sometimes I'll sell lower if I think there's a strong possibility I think it can get there. But in this instance, that is 21.8% chance of going in the money and being assigned. So what happens when it goes to being assigned is that those shares are gone away, and you collect, one, your premium, but you also collect the amount that goes into that. So it goes from 7 to 9, you collect that difference. So that's $200 that you gain there. One of the things that you don't want to do is go below your cost basis unless that's something you want to do and you want to sell it at the stock. If you just don't like it anymore, that's something you can do to gain extra premium. When setting this up, you want to go into quantity, and you say you have, let's just say 100. So you put 1, and then you close sell to open. And so for this one, I'm going to do my IRA. I can't close it out because I already have it, but it'll say the bid and the ask. I just do a market order to be filled. You can change it to whatever you want. And then I think, let's go to limit order. Yeah, you can do for whatever. So good till canceled. You can do wherever you want to do. And I think you can also set this up to sell as well. But that's how to set it up. And then again, you're not going to make exponential gains, but you're going to gain 1 to 3% a month, or however how much you do it. I think the month where I looked at it's between 1 and 3%. So that's just a little bit extra you can do. I'm going to end the video here. I don't want to splice too many, but thank you guys so much for watching, and I hope you have a great rest of the day. Bye bye.